This is Jordan with Conquer Trading and Investing, and in today's session, we'll be taking a look at many are predicting a bear market. We got some Goldman predicting 30% chance of an upcoming recession. Many people that I highly respect are looking for 2026 to be a bear, and I'm going to present to you on this ongoing conversation that we have. We continue in covering all bases. On Friday, we talked about and we looked at specifically and wondering, have the markets come too far too quickly? And we went ahead and we pulled up seasonalities, and you could see that we are entering into a period where, through the end of July through August is pretty flat tape as we get ready and head into earnings seasons. August could see a bit of a drawdown, and the first 3 weeks of September. We are currently and have been out of the 20% drawdown, riding so far the highest of all deviations out of it. And the question presented is, what happens now as we head towards August 1st? There is a lot actually on the table, including whether or not Trump will taco out. And I would say that there's probably a decent chance he will. There's a long history of it. And if he doesn't, and we actually see that Powell was correct, and we begin to see some higher prices that are passed on to the consumer, you have to wonder what type of crunch that puts on the U.S. consumer. You're seeing obviously a lot of people who are ready because of the devaluation of the dollar, because of the loss of purchasing power, having a hard time making ends meet. A lot of people have to return to their obligations of paying their loans. Obviously, people are feeling it everywhere. And if they have all of a sudden a higher tax to eat, a higher cost of purchase, that might go ahead and continue to put some pressure out on the consumer. And you have to wonder in this particular situation, the difference between the market and the economy. You have to wonder. I remember looking at just going back into last year when Germany was in recession and watching the index trading, the DAX trading at all-time highs. The last few days of July are setting the stage potentially for the rest of the year. Or are we going to have to go through what seasonality suggests? And if we make it out to the end of September, will we then be able to have a clearer picture? And at that point, that's what I think. I would think that, and that's why we did the video on Friday. The video on Friday was just talking about whether or not we have come too far too fast. If you haven't seen it, go ahead to the live tab on the YouTube channel. Go ahead and make sure your expectations are set correctly. And then, I wouldn't be surprised if we have some sideways tape running through the summer. And my expectations, or what I'm hoping, is that by then, into the fall, we're able to go ahead and gain some momentum. Now, we are trading at the top of this deviation over here. Do you guys like orange? I like orange. Bitcoin here in the green today, leading the way. Bitcoin, best performing asset of the last 12 months. There's no doubt it continues to turn heads, and we got a lot to look forward to. But are we going to continue to, be towards the top tier? And are we going to be able to shake off this current seasonalities? And I mean, that could happen. I know that right now that we are positioned absolutely wonderfully. And what do I mean by that? If we drop in and we look at equities, and we're holding NVIDIA, right? 17% into profit. Lots of wiggle room there. If for some reason upcoming earnings disappoint, we're going to be able to get out of these trades, obviously into some profit. FNGU, you can see, is minus 2.6%. That one is under pressure. Late entry because of the ticker change. This would have been an actual beautiful wave to be riding. Otherwise, when you're seeing TQQQ up 29%, you're looking at normally FNG would be up something like 44% or more. Tesla finally entering in the market. And then we have our Bitcoin plays over here, MicroStrategy, open position 5%, and the spot Bitcoin ETF, IBIT, open 8%. And then, of course, we have what is some really nice alt positions taking effect. And we've looked at here why our expectations were this could be a good moment for altcoins. And then sure enough, we did get the technical breakout. On the breakout, you could see it reflected in our positioning. And what I mean by that is, Bitcoin bull runs remains in the market, showing that upside momentum has the potential here to continue to carry 19%. And then our 8-hour swing trades are all on the sidelines. And why they're on the sidelines, you're seeing Solana entering the market and then building up a quick 20%. Cardano just leading Solana up 26%, and Ethereum continues holding 44%. So we put ourselves in a really nice position of power. And either what's going to happen is that we're going to wind up taking some profits, getting on the sidelines, and then waiting to see whether or not we're able to continue and have some carry, or we'll continue holding and pushing in these positions. That's why it's a position of power, and it's a good place to be. We are seeing some things that I mentioned to you earlier. I think this is all important for the conversation we're going to have today. A lot of people indeed are looking for us in 2026 to enter into a bear market. You can see over here that, as I mentioned earlier, Goldman is definitely cautious. Polymarket has an 18% chance that in the next 12 months that the US could enter into a recession. And obviously, as you go into April and May, when there was a lot of uncertainty as Liberation Day was upon us, the odds of the recession were significantly higher, as were inflation expectations. Both of those have come down now significantly. Nevertheless, Goldman is saying, well, we have a 30% chance, which is double the unconditional historic average. They are pointing to that potentially we're going to see some rising prices because of tariffs that are placed out. That's going to put a further crunch on the consumer. And there are people that are currently very bearish. And I'm telling you that the music's not going to stop, that the music is actually going to be turned up and get going. I have to bring this up over here right now as we continue the conversation. And obviously, you're aware of all of the. Actually, I don't know how to read into it. I don't really know what's going on, but Powell definitely taking the brunt of a lot of blows coming from all different directions, the current administration. And Besson is asking the question, like, listen, like, what do all these PhDs? I have to say, and I mean, I've been for the last, like, since I've known you all I've been talking about is end the Fed. I remember 15 years ago writing a social justice paper on what I believe to be one of the greatest evils in the world, and that was the central banking fractional reserve debt-based system. And I've always been a fan of Andrew Jackson, right? Andrew Jackson taking down the banks until they were able to regain power once again in 1913 on the passage of the Federal Reserve Act. And, the question is, and a lot of people for real and rightfully so, wrongly, whatever, they don't like Trump. And if Trump has a problem with the banksters, they're going to side with the banksters. And like, that's fine. Also, a lot of people believe that Jay Powell has been a terrific Fed chair. They really do believe that. I had issues when he flooded the system with dollars and then continued at an accelerated rate for 2 years, running everything hot, and then saying, well, don't worry about inflation. I mean, that was a big miss. That's likely what he will be remembered for. That's likely will be his legacy. And unfortunately, I'm sure it's not an easy job. I'm sure it's a very difficult job. I can't remember the last central banker head that did a good job at it in our lifetime. Nevertheless, their decisions affect our livelihoods, the livelihoods of our community around the world, and also our children's future. So if Trump is looking to go ahead and not, fire Powell, but abolish the central bank altogether, look, we need some type of lender of last resort. if the liquidity dries up, there's going to be a crisis and there needs to be some type of lender of last resort. Does it need to be the Fed, or are we looking at some fourth turning type things over here as institutions will fall? Will the Federal Reserve be the one that does? Will it be, the United States government? We don't know which one is going to be. Um, and then you can see over here, and we'll talk about this in a minute in relation to Bitcoin, that we're starting to see the pace of projected cuts to pick up. Some believe starting as early as September with 3 consecutive 25 basis point cuts. It reminds me of the summer of 2019 when the Fed cut 75 basis points and then abruptly stopped QT and began running the balance sheet the other way. And obviously into 2026, more cuts are now projected and expected. We saw, or you might have seen that yesterday we talked about the sell impulse that could potentially be triggering on the dollar. That is triggered yesterday and now continuing to accelerate to the downside. As that's happening at the same time, you're seeing the 10-year continuing now to go bid as well. And we had yesterday that sell impulse triggered, which is a buy impulse on bonds. So we're looking for the bid into bonds, and then you can see that now continuing to take off. And it seems a lot of people are it's look, again, I've mentioned it before. I'm going to mention it again. If you would have told me that in 2025, in the first 6 months, the US dollar was going to come off 10%, and during those first 6 months, you were going to see Bitcoin go sideways, I wouldn't have believed that was going to happen. I would have said, no, Bitcoin is going to appreciate significantly in price. And now we're seeing the dollar come off again. Is that going to be good for risk assets, or are we in some type of new regime where that's actually bearish for risk? I don't know. I mean, I do not know. And I guess I have a concern, which is why I am voicing it to you now. There's nothing for us to add to the analysis over here except like, well, we hit our target on Bitcoin dominance. Should we be looking for some type of fade? Such an aggressive angle over here, and we'll look at aggressive angles as well coming up. You know what? If it seems very aggressive over here, we'll have to watch it just in case. Let me just go ahead and get everything going to get ready for today's session. So that's where I'm going to watch. Right now, obviously, this continues to be stop loss. I mean, this far, acceleration, move your stop loss to break even, continue to monitor and wait. Is it too soon to do anything else? Have your eye on here. Obviously, alts are very volatile. They could smash it to the upside and then again to the down. We're into a little bit of resistance. That resistance is what we said. You know what? This is probably the first target that we would reach. And I don't know what happens next. I don't know whether or not Bitcoin bounces from here against alts, or whether or not we're able to continue this nice move down. And if we were to continue, we're targeting then in this area over here around 58. That's likely from there where we would set up some type of consolidation, some type of continuation pattern. And if that's happening, I would further expect alts to continue to make some legs. Now, all of this completely gets wiped out if we ever see some type of, you saw the president of the United States continues to position and increase his Bitcoin holdings. What did they just raise? $3 billion. I had it set up for you as a slide. I removed it ahead of going live. I'm not sure of the exact number, but is he front running perhaps some legislation like the Bitcoin Act? Potentially, if that is happening, that's a major adoption event. If that were to happen, I think that we see Bitcoin dominance touching the green line above right around 70%. Don't worry, eventually that will be liquidity that will flow into Ethereum and obviously various other alts as well. Even we've seen Cardano here taking a new entry and putting some lift on the upside, while the founder is talking about selling Cardano to buy Bitcoin. Nevertheless, I believe that there's room for big moves. That's for sure. All right, let's move over. And well, this chart is interesting. This is a chart of gold. And what I wanted to do is look at a particular period. The particular period that I'm looking at, and I want to set expectations of what I believe is going to happen. I want to take a look at what a lot of other people think is happening, and then we're going to explain what's going on. But normally I front load. I'm going the other way this time. Very, very interesting. So you can see this is some charts over here from Lynn Alden. I happen to be on the same page as Lynn, so I feel like I'm in good company, no question about it. But she points to that right now, when deciding if it's different this time or not. So that can mean a lot of things to a lot of people, and I'm going to use that in relation to, let's talk about the 4-year cycle, right? And we did a video, obviously, just so everyone was aware. This was on Thursday, and the video was signs Bitcoin is topping from a 4-year cycle perspective, so that everyone has the awareness they need in case indeed you're looking at the cycle top, as well as to where you know that's wrong. These are very important awareness points to help you continue to navigate these markets. And Lynn is wondering, is this time different? And she points to the fiscal dominance that we're in is indeed different than the monetary dominance that we're so used to. One of the things that we're so used to, I was listening to someone today talking about like refinancing their mortgage every 3 or 4 years, and then I was wondering like, well, of course, I mean, you're talking about a period from roughly 1980 to 2020. I don't know that that same playbook is going to work going forward. A lot of people believe that we've entered into a secular bear market when it comes to bonds. And I very much embrace and believe that. However, I am in the camp that, first of all, sharper, quicker cycles. I am under the belief that for the Fed to be able to run the printers to start QE, they're going to need to get rates down as close as they can to the zero bound. I believe that right now, what the US is trying to do, what the government is pivoting, is to growing their way out of this debt to GDP situation they have themselves in. And ultimately, I'm under the belief that that is going to lead to them having no choice but to run the printers again. So quicker, sharper cycles. The first time they ran QE, it was the crisis of 2008. It was 12 years later, 2020, right? We're now 5 years past that. I don't think they have another 7 years. Whether or not they have another 2, 3, 4, we're going to find out. But I do believe that they're going to be running the printers, and I do believe when they do, they're going to have to get rates down as close to the zero bound as possible in order to do that. That will be an opportunity, but that might be one of the last opportunities. It might be a very short window indeed to see rates low like that once again, but I don't think we're headed there anytime soon. Lynn points to fiscal dominance, 2019 to 2025. It was structurally different. There we go, on the same page than the 1980 to 2020 period. So I guess we're off by a year, but she's actually more accurate than I'm being over here. And the reason I say that is because Lynn is pointing to 2019. And if you remember what happened in September of 2019, if I could find it right over here, is right. Fed had cut 75 basis points. And then at this particular point in time, the Fed begins and has no choice but to begin raising their balance sheet. They called it organic balance sheet expansion. Nevertheless, the balance sheet was rising. And this was significantly bullish for risk. Now, the part below the yellow line you see over there was obviously the global lockdowns. And that was a major crisis, a major liquidity event. And of course, Bitcoin was not immune. By the way, as we talk about bear markets and recessions, Bitcoin is not immune to that either. Outside of a major, major adoption event, a major adoption event would be the US begins stacking 100,000, 200,000 Bitcoin a year. They wouldn't be the only ones. You would see that ignite, back in the 80s, you had the nuke war, like, stockpile as many nukes as possible. In this case, it would be the stockpile as much Bitcoin as possible. And I do believe that you would see a different type of dynamic, but let's assume that's not happening. And if we were to enter into a recession, no, I don't believe that Bitcoin is immune. On the homepage of the YouTube, on the video section, not the live section, there is a video that's recently published some months ago that talks specifically about that. Um, Jumping back down. So this is where Lynn is pointing to late 2019, that what we saw was fiscal dominance beginning to take hold. Prior to then, if the economy was running very weak, they could go ahead and lower rates. If the economy was running too hot, they could go ahead and raise rates and put a brake on it. You could see the difference in this particular situation. In 2022, the Fed went on the most aggressive uh, um, rate hiking episode. And what did it do to the economy? Yeah, there was a bit of a scare, but look what's happened since. Rates remain elevated. And there was that 50 basis point cut prior to the election. The Fed is independent, but there was that cut, and you could see over here with rates elevated, markets continue to move in this direction. So the tightening has had less of an effect that it has in time past. That's something that's really that you gotta just be aware of as this new situation that potentially, well, I don't think potentially, here we are, right? What are you going to do about the deficits? And then you have the interest growing at an exponential rate. I remember when it first overtook the defense spending of the US, which was roughly $800 billion a year. And when the interest overpassed that, and then in a heartbeat, it was over $1 trillion. That continues to accelerate. And I do think that, like, you know what? Central bank's independent, except that it has shareholders, and obviously it works in the interest of its shareholders. And you know what? As a country, you would think that the central bank might work in favor of a particular country that the central bank stands within, in so much as that, well, listen, if there's a bunch of debt to be rolled over and it's costing X amount extra in interest, you could lower the Fed funds, roll over the debt, and then bring it back up. Nothing wrong with that. Save yourself $800 billion of interest, which is what it's costing to roll over the debt at this accelerated level, or elevated level, I should say. Either which way, I'm bringing you back over to here. And this is a period in time where you saw a monetary base percentage of GDP elevated, right? As we see now. And I wanted to focus in on this particular period. And then I was looking at, well, what is gold doing during that particular period? And what's interesting is during that particular period is when they revalued gold higher. That is interesting. We've talked about the conversation that before I always thought and presented to you, like, within the next 10 years, gold's going to be revalued. I pictured that as we'd wake up one morning and gold would be $15,000, $20,000 an ounce. I thought it would just be revalued like that. And then what we've been seeing seems to be a slow motion revaluation taking place before our eyes. We looked at that in the view of the RSI yesterday just being so completely overbought and continuing to rise and maintain that. I mean, it looks like it is a slow motion revaluation. And why I brought up to you yesterday, as I expect, the music's about to be turned up when we talk about things like ending the Fed, which, whether or not that's just like jawboning or whatever reason they're doing it, distraction. Seems like distraction, like what Epstein files, like, to me. But the point is that they're calling for a lot of deregulation ahead. I saw yesterday an article saying that they're looking to get rid of the pattern day trader rule. If you remember, before the pattern day trading rule, lots of people, started with nothing and were able to go ahead and do some wild, wonderful things. And then to protect them, get them back in the workforce, they're like, no, 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 no. You if you don't have $25,000 in excess capital for a trading account, you can't play. You can't do it. And they're talking about getting rid of the pattern day trading rule, or making it to a minimum of $2,000. And it won't be the last thing that they do. They're going to continue to go ahead, and they're going to make sure that they deregulate across the board. This is going to have, sorry about that. And this is going to have ramifications. This is turning up the fire, or turning up the volume for the news to the music to continue. So I'm looking at this area and I'm saying to myself, well, okay, that they saw gold revalue during this period. We're seeing gold rising right now. I expect it's not going to be gold this time only, and it's also going to be Bitcoin. And we see lots of pieces being put in place rather rapidly in order for people to front run what's taking place. And at that same time, I'm thinking of all of you, and all of you who are early and early adopters, and all of you who were able to front run the institutions. Now you could see the big players are here, and they're actually beginning to front run themselves. And then I see a lot of people saying, you know what, I am so used to the 4-year cycle. And this is when the 4-year cycle says it's about time to get out. And I think about all the people over the last 4 and 8 years who have really, piled hard into a lot of different altcoins because they felt Bitcoin was, a little overvalued. And at this point, like, I feel like a lot of people got left behind. And I'm worried that a lot of people are going to get left behind once again. I know some people, right, sold a lot of Bitcoin at $30,000, thinking they would do the right thing. Now, as the Bitcoin's over 100,000, they're like, you know what? I probably made a bad decision. Let's look at that a little further. First, let's continue, as we're starting the opposite way today. Let's continue looking at the side. So here we got the zero bound during this period, this previous period, where we did see gold revalued when monetary base percent of GDP was at these highs, and they had to take rates down towards the zero bound. How does Bitcoin perform when rates are being cut? We'll have to look at that together. And then you can see they took it down and have kept it down until the most recent episode, where this was rising into 2018. The last hike was December 2018, and then obviously we went back towards the zero bound again, and now we begin raising them again. And you can see the trend line over here. The breakout is the secular bear market, except much like this goes up and down. And I do believe that we're going to go up and down this way. All right. That's a very good illustration. I like it a lot. Nope. I don't think we're anything like a 5-year cycle. And again, the same people. Again, just one thing that I just want to note is that we talked about the changing nature of the cycle, not now, as many people are beginning to see and embrace. We began talking and setting our expectations all the way here in January of 2022, right? And then when Bitcoin made the new all-time high prior to the halving, that was a big signal. That's never happened before. And when it did, that reset our expectations once again. I'm trying to go ahead and find what is a good, there you go. You can see the all-time high prior to the halving instead of after the halving each time. And right now we're in the sustainable channel. And as long as we stay within that channel, my expectations are the walk continues. Now, if we break down and we have an invalidation of the bull market, that's going to say to me that the drawdown, the downside drawdown, is going to wind up being much greater, much like you have another 40-50% from where it breaks. That's a big deal. If that's something to watch out for. Obviously, if that occurs, when that occurs, the next thing that we do is look for an invalidation of the breakdown or repair, right? And then if this breaks out to the upside, like let's pretend the Bitcoin Act is passed and we have an adoption event and this breaks out to the upside, you can see that's why I have this yellow line over here. I have this yellow line to show you that expectations, anytime you have an upward sloping channel and you break out to the upside, it sets off elevated price acceleration. Now, I don't think at a market cap today of $2 trillion that we're going to see this rapid price acceleration. A lot of people are looking for it. I don't believe that it's in the cards whatsoever. And but if we get a break to the upside, that's something that we have to watch out for. And then we have to look for a different type of breakdown. I talked about this breakdown being very, very, very steep, right? Because look at the acceleration upwards. So if this does pierce, it does suggest a strong reversion down, towards the mean. That's just how markets work. Nevertheless, if you get the breakdown, you're then looking for when when you have a impulse the other direction, the other way. So let's continue over here. And what was going on? So they devalued the dollar versus gold and ran large deficits. Obviously, right now they're running large deficits. Right now, you see the dollar has begun to be devalued, down 10%, and now continuing down. We just looked at under another sell impulse. So the dollar's being devalued. Last time gold was the hard money of choice. Today we have gold and Bitcoin. And then, like here we are today, the question is, what are they going to do again? Run massive deficits. And by the way, as you run massive deficits, as government spending increases, what happens? Is that something that is conducive to growth or conducive to slowdown? No, conducive to growth. That's the music being turned up. If they want to slow down the economy, the government backs off spending. That's something that go ahead and it slows everything down. When they increase spending, when they're running massive deficits, that's throwing fuel out onto the fire. The music is just getting ready to be turned up. It's just getting ready to be turned up. And that's why when we talk about, or when I compare the potential, the potential, and we look at what happened over here, and I talk about this upside deviation, this deviation from 1998, this ran another 2 years, all through 1998, all through 1999, and then you saw the massive bubble, the massive explosion .com bubble burst, right? Prior to that, it had been running for 2 years, S&P 500 back to back, 1996, 1997, 20% gains. That's the same situation we're in today. We saw 2023, 2024, back to back 20% plus S&P 500 back to back gains. Both had a 20% drawdown, both towards the upside deviation. There are a lot of similarities that are occurring back then as of now. And you have to wonder, right? Is this time different? And if it's different, is it because of the 4-year cycle? Or is it because of, and again, we always said monetary policy. The bull of all bulls, Bitcoin, will not run until monetary policy is aligned. And this is we called the breakout of the bull. We called it at 17,250. Go to the YouTube video in December 2022, calling the bull market breakout. And I said the whole time, well, the bull of all bulls won't really be running until monetary policy aligns. But we're now turning the corner here, and it's actually not monetary policy. And I told you, eventually the printers are going to run again. And then monetary policy is really aligned. But right now we're not looking at that. We're looking at fiscal policy aligning because they want to run it hot. So jumping over and expectations. My expectations outside of a major Bitcoin adoption event, outside of the Bitcoin Act being passed, is that into the end of the year, 4-year cycle behavior suggests this massive push upwards, this elevated liftoff, and then entering into the bear market. And I'm saying no, soon enough, we're going to see a major deviation. That's why I have the green line just continuing along the stable channel, right? And that will be one thing where you say, okay, past 2026, if that's occurring, that's a major difference. A major difference of 4-year cycle behavior. By next summer, if we are outside of the deviation, and I have a better chart that I've shown you, I could show you over here. Let me just go ahead and into this one, and you can see that if we, and it's never happened before, it's never happened where as you enter into past 600 days that a cycle is able to trade above a previous cycle. What I'm suggesting is that as we get towards next summer, we're going to see this black cycle or this current cycle trading above the previous cycle. At that point in time, if anyone else still believes in 4-year cycle, it's over. It's over. But we are seeing, and here, like Crypto Burb is someone whose analysis I really immensely respect. I really do. And so this is someone who has a history of getting it right, and not for a few years, for many years. He is definitely an apt market analyst. He knows what's going on. He's expecting that we're about to hit a very short and profitable window for many. It could happen. It could happen. Be prepared. You can see over here, he's saying right now that he believes right now the last phase is the craziest one, that where you have the potential here to make a lot of money, but also where most will buy the top and suffer the consequences. 2026 is for bears, and this is where we differ. Now Goldman is saying 30% chance they give it that US enters a recession. I'm looking at the Fed getting ready to begin to lower rates. That matters immensely. When the Fed begins cutting rates, if they're cutting into a recession, not 6, 9 months out, 12 months out, you're looking at being roughly off. Look at this. When they're cutting into a recession 3 months out, S&P 500's off 14%. And then 12 months later off 11%. But if they're cutting into normalization, so this is a great marker. Fed begins cutting in September, let's say, for example. And then over the next 3 months by the end of the year, are we looking at the market majorly rattled? And if so, that suggests that we're cutting into a recession, right? What happens if the Fed begins cutting in September and by November and December we're trading S&P, NASDAQ trading new all-time highs? That suggests that they're cutting into normalization. That's a strong indication that going forward, another 3 months, another 9 months out, that markets are going to be significantly higher, not lower. That's a great vantage point to consider, to check. This one over here, I had a load over here, and it points to that Bitcoin just hit a golden cross. And if you look back in the past, 2016 from the cross, you saw accelerated price behavior 139%. 2017, it was like almost a double cross, a year apart. You can see the crosses over here, recrosses, and then crosses again. And you saw a major 2017 bull run. Even in 2020, when you got the cross, you saw that. Now, what's different? Well, the market cap is majorly different. It's significantly greater than it was for this cross when Bitcoin was at $6,000. I mean, the market cap was almost tiny. And going back even further, the market cap here was almost insignificant. And look at this, is interesting though. This channel, when we had the double cross, it reminds me of this. It reminds me a lot of this. Here's the double cross down over here. And we just had a cross, and we might have a cross, and then it might uncross, and then it might cross, and then it might uncross, and then it might cross. It seems to be more of the situation that we are in right now. So I guess I'm not getting all hoopla excited about it. Bullish on Bitcoin, obviously, and more bullish than ever. But I don't think that we are headed towards some accelerated price action. I'm giving you the point so you could see where I'm wrong. And I have my invalidations, right? And then, if price starts beginning to get elevated and breaks out of this channel, and I showed you over here this yellow channel showing the significance of the breakout, and then the new angle, right? The steeper angle. then my invalidation point will become a lot higher than it is right now because it'll have reason to go ahead and adjust it. That's not there right now. That's not there right now. So I make sure I got all this. So over here we have um Gert, and he's saying that the window for crypto so I feel like when most people are talking about this window, this narrow window that's coming, I feel like, they're talking more about altcoins. I do believe that. But the charts that are being presented are Bitcoin. So I guess I have to consider both. And he's talking about we're about to go vertical and pointing up towards $350,000 to happen right now in a window of I don't see it happening outside of a major adoption event. If we get a major adoption event, I sure think that the FOMO is going to be crazy. I also happen to think that it'll actually be lasting if something like that were to occur, but we will navigate it together if we do. So there's where we are and round it down. And I feel like, I feel like we have two different camps going on, or three different camps. We have one camp that is looking for 4-year cycle behavior to occur. It's 4 years, every 4 years we get the blow off and then we go into recession, bear market. We are just now into a point in time where we're getting ready for the cuts. If you look at how Bitcoin has reacted in the past, as they raised rates, what are they doing? They're slowing down the economy. And you could see that ultimately the raising of the rates catches up to Bitcoin, bear market, right? What happened this time? They began raising rates. You saw the market go into correction, but here's the difference as we leave monetary policy dominance and go to fiscal dominance. They're raising rates. It's an aggressive rate hiking cycle, the most aggressive in history, and here's risk. Initial shock, and then here's risk as they continue to, and they're keeping it elevated. And what's happening? Market doesn't care. There's less of an effect. That monetary policy has much less of an effect. If you go back and you look prior, let me jump down over here. So here you could see a period where they're lowering rates. Obviously, Bitcoin reacts very well to the lowering of the rates. Again, lowering the rates, Bitcoin reacts very well to periods when they lower the rates. You could see that. Now, what happened over here? They began lowering rates. You begin to see the NASDAQ melt up, S&P 500 melt up. Bitcoin begins, and then this is a crisis. Now, this type of liquidity crisis, and this is important over here. Let me go and jump over here. And there's another one. It's not just if they're cutting into normalization or recession. Look at the panic cut. And from a panic cut, that's a panic. A liquidity crisis is a panic. 3 months out, forget 6 months out, 12 months out, the most bullish of all outcomes. If as they begin cutting, let's say it's early as September as the market is pricing in right now, or if it begins after Powell leaves in 2026, if that leads to some type of situation, liquidity crisis, and they have to cut rapidly, then going forward, that's a panic cut. Yeah, expect downside volatility without a question everywhere, all across the board. However, coming out of it would be quite bullish. So what I'm suggesting is what people are suggesting, that, or people believe that what we're headed for is a period of, sharp blow off. You can see it over here, and as it's happened in the past. And then other people are suggesting that I don't know what they're suggesting. Other people, I guess other people are beginning now to see what we've been proponents of, that we are looking at a change in behavior. Now, the change of behavior is because of adoption, and when I point to the adoption, I'm talking about, well, we've left early adopters and now we're into early majority. It's very clear. It's very clear the corporate bid. It's very clear the government's now pivoting, and you could see across the board the amount of capital coming in is at a much elevated and greater pace. Yes, you have some OG holders over here who, legends are, distributing some Bitcoin. And for sure, it puts a cat in the elevated motion, but there's a constant bid, and you're seeing Bitcoin moving from those who have been strong holders, now ready to take some profit, and going into what are new strong hands and people and companies and institutions that are not looking to make a quick buck off of a cycle, but they're looking to put this pristine collateral. That's a shout out to Raul. He was the first I know to come up with pristine collateral onto their balance sheets. So what I'm suggesting happens over here is that we continue, but in the sustainable channel, right? Now, I've showed you before, this is just the next target I give, so that we could say whether or not, as we move towards, this area, was I correct? And then after there, my expectation another notable difference is you're not going to see the major bear market and price reflected, and you're going to see this current cycle actually be above the furthermost upside deviation. At that point in time, it'll be clear to everyone, and everyone pretend they saw it the whole time. And then as we move in towards 2028, I expect that we are towards the top end of the deviation. But let's get through this period first. This is just a few months away. Let's see how well we are seeing what is like being able to spot trends early means before other people do, right? So there we are today, and we'll keep going because each and every day we're presented with new information we have to take in, calculate, absorb, and if we see, everyone, by the way, and isn't that the beauty? But to make money, all we need to do is follow our mechanical system. Nevertheless, be the best at it anyway. And, if we begin to see at any point in time, the hard data begin to solve. I saw my friend Peter, Game of Trades. Game of Trades is now Bravo's research. And he pointed out to, if you begin to see the home builders come off, that's a very bad sign of what's ahead. We're currently seeing extremely poor earnings coming out for the home builders. There are cases to be made that we are headed towards a slowdown. I also have my good friend TXMC Trades talks about if they're pulling off a soft landing, watch out, because what you'll see it happening is the job market will make a turn and it'll begin increasing in jobs. I don't think we're going to see that. And I don't think we're going to see that because I think that I have a lot of friends being, over the last couple of years being laid off. A lot of tech companies, a lot of people, and I do think that is the trend that is going to continue. So I don't really see an increase coming in the job strengthening necessarily, but it continues to maintain. If we see a deterioration, if we see CPI beginning to rise, if we see the job market coming off, that's going to be a concern for us that actually we are headed towards an event-driven recession. However, Lynn points to, I think this is like people are not able to comprehend because we have not lived through a situation like this. And if they have to go ahead and do what they need to do to maintain the deficits, which means devalue the dollar against gold and Bitcoin, and they're going to go ahead and continue to run it hot, a lot of the models and assumptions that people have seen and becoming great are no longer going to work. All right, everyone. I hope you enjoyed the session. I know I did, and I knew each and every day to be here with you all to be able to go ahead and navigate these markets together, because each and every day together we wound up having a greater understanding of what's taking place and be able to navigate. Let's take a look at Riot, see how she's doing. It was interesting for me to see the breakdown of the pattern. Look at Riot right over here, Ace, looking to trigger. That's a weekly chart. Come down to a daily, right? I'll close above on the daily right here, signals that this is an active trade. I mean, you might have gotten in on the spike, a spike above right there, like $14.85. That's an entry from my view, right? Initial stop loss is the yellow, and likely, you know what? If I mean, is that aggressive like the altcoins? We have to watch it. I mean, you have to watch that and see what happens. This pattern over here, 2012 on Bitcoin, right now taking place on MicroStrategy. See that massive wave up, then the extended drawdown and consolidation until the sharp move up, then the launch pad, and then boom, out for the launch. Bitcoin did it 2012 during that double wave, and it was massive. This wave over here taking out this peak over here. We looked at it, happened on gold, and gold wound up failing. It failed miserably. So it's not a foolproof pattern, and that's a great reminder that it looks good. A lot miners are out of favor. It looks good, but you never know. All right, friends. What do we think on the Nas? So what do we think on the NASDAQ? I guess that's what I mean. Like I tell you to follow the tone, right? And when my cadence is boom, 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 and I'm confident I see it clearly, here I'm pausing. What do I think on the NASDAQ? Well, I don't know. Right here, I don't have a view. Come down to the 30, right? Sharp sell off. I don't know if that was on Powell's speech or this occurred after it. People expecting Powell to resign. He's not resigning. I don't have a view here. And that's a good place to stand aside. So I don't have a view. Got to be comfortable on that. All right, everyone. God bless you all. Have a beautiful, beautiful day. And I'll see you all tomorrow for another session. CTM strong. Have a beautiful day, everyone. God bless you.